right, so let me start sharing my screen here and let's jump right into it. Thank you for taking the time to watch this video. First video on this channel, just to kind of give a synopsis of what this channel is going to entail. I'm kind of going to be doing a little bit of everything on this channel. I'm starting off with just focusing on Forex stuff. I'm going to be doing some stuff going over the strategy that I've been using for the past while, and I'm going to be using all of 2020. I'm probably going to be going over a little bit of tutorials on how to use MT4, where to go and find certain things on MT4, how to chart on MT4, how to chart on TradingView. Probably go over a bunch of books that I've read in my Forex journey that have helped me, and some books that I'm actually currently reading now, Forex related and not Forex related. But let's just jump right into what I want to go over today, and that's the trading strategy that I've been testing for quite some time now, and I'm planning on using for all of 2020 and further as one of my main trading strategies. This one is called the London break. Some people may have heard of it. There are different ways of trading the London break. I have my own personal method that I like to trade it. I usually see people trading it on the 1 hour, some on the 30-minute, which is perfectly fine. Everybody, you'll learn that in the Forex market, especially if you're new in this. Everybody has their own specific way of doing things, and that is completely fine. I found what works for me, and I want to share with you guys what I've found here. And if you guys can take it and run with it and apply it in your own way, then great. I personally trade on the 15-minute. And with the London pairs, I trade GBP USD and GBP CAD. So this is TradingView for any beginners that don't know. Of course, any experienced traders, they will know exactly what this is. And I've actually pulled up, you can go to the indicator section up here and type in sessions, and you can get this indicator to pop up, and you can change the colors a little bit. Green is when the London session starts. When you see brown here, that's when New York session starts and overlaps with London. And when it goes red is when London session ends and New York is still running. And the period separator, the dotted line here, is 5 o'clock Eastern Standard Time every single day. So there's a period separator over here, here is separator over here. So this is one whole day in length in between these. So just to kind of give a rundown of my rules in this strategy and what I do. And I've already back tested for quite some time on here, and I'm going to be showing you guys all these back tests. So what I usually do, this is GBP CAD. So what I'll do is I will box in the Tokyo session from period separator to the beginning of the London session, starting from the high and the low of that trading session, including wicks. Some people like to go with just bodies. I found out that sometimes it will get outside of that area, and this right here is a perfect example of that. If I was to draw just on body and wait for the break and close of that box, I would have gotten in for a sell here. Since I drew it on the wick, it didn't close far enough under for me to get into a trade on that. I'd be waiting for it to break further out of that. But backing up a little bit again now, go from period separator to the beginning of London session. This is on the 15-minute chart. So each one of these candles are 15 minutes in length. From high to low, including wicks. And what I'll do is I will wait for the break and close. I don't place buy stops or sell stops on the outside of my zone here. Some people like to trade the London breakout by placing buy stops and sell stops. And if that's what you like to do, then by all means, go ahead. It's just my personal trading strategy. I wait for a break and close to make sure price action is actually heading that direction or making the decision that it could push further that way. Because you can get wicks outside of the zone, like here. You can see this is where my box, you can see the horizontal line here, how it wicked up outside. If I had a buy stop in here, it would have activated right there and then went further back into drawdown and then finally came back out. This is a perfect example of why I wait for a break and close. So right here, you can see that candle closed right there, but it wasn't outside my zone. This candle right here came up, closed right there. That's where I'd buy. Now, this strategy, these candles are happening London session for me in my time zone. I'm in Eastern time zone in South Carolina. So London session for me starts at 3 o'clock in the morning. So I'm personally getting up. I have an alarm that sets to go off at about 2:40, 2:45 every single morning. I get up, go and look at GU and GCAD, draw my boxes, set my alerts outside of my zones, and I wait. Once I hear that alert go off, I'll get up, wait to see if that 15-minute candle closes outside of my zone. If it does, I enter. If it doesn't, I continue to wait. Do not force a trade setup. If anything that I've learned in my practice, all my trading over the past 2 years, wait for the right setup. Don't try to force a trade. So getting back on track here, this candle pushed up, closed outside of the zone, so I would immediately bought on the open of the next candle. And how I calculate my stop loss and my take profit. Now, depending on the size of your account, I like to twin trade these setups. And I will get into that why a little bit here later on. But how I calculate my stop loss and take profit is I go and I measure this box. You can see it was about 82 pips, 82, 83 pips. So what I do is I go over my calculator, let's just say 83 pips, divide that in half. So my stop loss is going to be about 41 pips, 41.5, 41.5. And excuse me. My risk reward ratio for GBP CAD is 1 to 1.25. So I go a little bit, I don't do a 1-to-1 trade setup because then it's kind of 50-50. You want your reward to be higher than your risk. So over the long, in the macro perspective of things, your wins are going to outweigh your losses. Even if you have a couple losses, which I'm going to be back testing here with you, and you will see losses happen, but the wins need to be larger than the losses. So I take my stop loss, of this box would be 41 and a half pips, and I multiply that by 1.25. So I'm risking about 41 pips, and I'm going for about 51, 52 pips. And you could see once I go over this box right here, I risked 41 pips and went for a take profit of 51 pips. Excuse me. And you could see just in a matter of 15, 30, 45, 1 hour, this candle right here would have hit my take profit. In 1 hour of me opening that trade, be taking 51 pips. Now, how I mentioned earlier, I twin trade these. So when I get into this trader here, I'm entering twice, 2 positions, whether that's 2.01s, 2.02s, 2.03s. It all depends on the size of your account. My good rule of thumb is 0.01 per $100 in the account. So if you have a $200 account, which is what I recommend if you want to twin trade this, $200 account, you could safely enter in this trade 0.01 2 times. 0.01 is 10 cents per pip. So in this circumstance, if we were risking 10 cents per pip and it went for 51 pips, that first trade when it hit take profit on a $200 account would have been a profit of $5.10 roughly. Now the second order, once my first trade hits take profit. Now, the way I do things is when I set that take profit, I set an alert right underneath where that take profit is. So if I'm not paying attention or I end up falling back asleep after I enter my positions, which sometimes happens, and I'll wake up when I hear that alert go off and that first trade closes and takes profit. When that happens, I will start fractal trailing. Fractal means you move your stop loss of that second order that was down off over here. So this big green push-up candle right here, let me move this over a little bit. This candle right here, once it hit take profit on my second order, I would wait for this candle to close up over here and move to this candle. Once that happened, I moved my stop loss on my second order to the bottom of this candle. And then once this candle moved around a little bit, you could see it wick down and wick back up and then closed and opened this candle. Once that happened, I moved my stop loss to the bottom of this candle. And then this candle moved around a little bit. It never hit my stop loss. Ended up closing and opening this candle. I moved my stop loss to the bottom of that candle. So I'm fractaling the bottom of each candle until it hits it. And then you can see this candle end up coming down and closing there, opening that one. So as soon as that happened, I moved my stop loss to the bottom of that candle, in which you can see right to the right of that. In this candle, I would have been taken out right at the bottom of this. So my second entry, remember this one took 51 pips, and I entered twice about right there. So I would have been taken out my second entry for about 54, 55 pips. So the first trade would have been 51 pips. Second trade would have been about 54, 55 pips. So in total, you're looking a little over 100 pips just in a little bit over an hour. One move in the middle of the night. Now, when it comes to catching pips like that, some people like to have a pip goal at the end of every single week of a couple hundred pips, whatever that may be. Some people like to stretch it. I myself, once I can hit 500 pips in a week, I'm done trading. Excuse me, let me get a drink. Just getting over a cold over here, so I apologize. I myself, once I hit 500 pips for the week, I'm done trading. I don't push it any higher. I don't try to go for any higher. I'm not greedy. Set yourself a pip goal. And now you're going to say, well, 500 pips, that's a lot. To some people, that's a lot. Some people, it's not. 500 pips a week can turn into a lot of money. Now, if you're trading 0.01 lot sizes, and this is, keep in mind, this is if you're only single trading and not twin trading. 10 cents per pip if you're trading 0.01 lot sizes, the smallest lot size you can trade, times 500 pips. Starting off on a little $100, $200 account, that's $50 a week. Now, if you were twin trading, there's $100 a week. So if you had let's just say we had a $100 account and we took 500 pips in a week. Your account's going to jump from 100 to 150 in 1 week. You made 50% growth of that account. Now the next week, you may or may not hit 500 pips. You may only hit 200, 250. Some weeks you may even have bad trading weeks where you lose money. It happens in the Forex markets. So it's all about slow compound growth. And now let's just say we had a $500 trading account and we were trading 0.05 lot sizes. So that's 50 cents per pip times 500 pips, 250 in a week. Does that make sense? Feel free to comment in the section down below if it does or does not, and I will reach out to you personally. Let's move on to the next trade setup. So that trade's all done, out of the way, and you can kind of see once New York hits, sometimes it moves a lot in the New York session, and sometimes it just goes kind of sideways. I like sideways markets because I like trading the breakouts like this. I like these consolidation zones. So once again, about 5 and 6 o'clock p.m. hits, and I don't trade. I end up going to sleep. And then over here, you can see down on the bottom where the time is. You can see 1:45 down right off over in this corner over here, 2:15 a.m., 2:30, 2:45 a.m. I'm waking up right here in this area every single morning, Eastern time. I wake up, I'm going to delete this box real quick just to show you guys. You can see the little red wick right there. The highest point is actually right here. So we're going to go right there, draw down and across to the bottom of that wick of this little indecision candle right here. And there's my box, and I wait for the break and close outside of that. Now when that happens, this box is about 67 pips. So my stop loss in this case, 67 divided by 2 is about 33, 34 pips times 1.25. So I'm risking about 33 pips for 41, 42 pips. Now, let's see what happens in this situation here. So eventually it got up and closed outside of the box. You can see, following it to the right there, this candle closed right here and opened this one. I would have entered in right at this candle. This trade, once I entered 2 positions, let's just say I entered 2.01 lot sizes. You could see my stop loss, just like I said, 33 pips for a 41 pip take profit. But this one ended up within 30 minutes, because that first candle is 15 minutes long, and so is this red push down right here. 30 minutes, it hits my stop loss, a losing trade. So in total, remember the previous trade was just a little over 100 pips. We would have just lost 66 pips. Negative, lost, losing trades, both of them. Because remember, I entered twice. I'm twin trading this. But this is what I was telling you earlier about having your risk reward ratio to where your wins are higher than your losses. Because even though I lost 66 pips, I'm still in profit overall in my account, because my last 2 trades, I caught just over 100. So I'm still 30, 40 pips in profit on my account, even with losing both of these trades. And now my rules I have here is if I get taken out, if it comes back inside the box and it hits my stop loss, if price action exits my box again and closes outside, I re-enter. Some people may call that chasing trades. I've back tested enough to where I like this. And this is what I want to do. And even though you do have losing trades, you're going to have losing trades, I re-enter on the re-exit of outside of the box. So it would have came down, hit my stop loss, and price would have moved back up. Excuse me again. And closed outside of the box right here. I would have entered again 2 times, same thing. 33 pip stop loss, 41 pip take profit. Now I just lost 66 here. Now this first trade would have hit take profit really quick for 41 pips. So I've made 75% of it back already in one trade. And then that second trade, remember, I trailed this one. So once that first one hits take profit of 41 pips, that trade's out, closed, already in profit in my account. And then once this 15-minute candle closes up here and opens this one, I move my stop loss on that second order to below this candle. And then this candle pushes up higher into profit and opens this one. I move my stop loss to the bottom of that candle. And then this candle moves around, doesn't hit stop loss, and opens this one. I move my stop loss to the bottom of this candle. And you can see once again, I would have gotten taken out in profit right here on this, because it came in wick down. It would have touched my stop loss and taken me out. So let's calculate. So we just lost 66 there. Gained 41 on the first position. And then another about 77 on the second position. So you lost 66 right there, and then gained 118 on the next 2 trades I took once it broke back out of the box. So we're well back over again. Made it all back, and then twice again over, pretty much. Moving on. Let's keep moving here. Really small consolidation zone. Can sometimes be good, can sometimes be bad. Situations like this, where it's a very small consolidation zone, I will sometimes put my stop loss on the other side of the box. Still put my take profit as 1.25 of that. Only on situations where the box is very small. So once again, I'm going to delete the box so I can show you guys. Find high, which is over here. The low, which is about right there. You can see the bottom of that wick. Draw straight across. Oops. Measure that box. It's roughly 30 pips. So we wait for the break and close, which happened very quickly right here at 3:15 a.m. So I would have gotten in once this red candle that pushed down, once it closed and opened up that next green one, I would have entered for a sell because it broke down to the bottom side. Now I would be putting my stop loss at 30 pips because it's a very, very small box. And 30 times 1.25 would be 38 pips. This trade took a little bit longer. And the hardest part about this strategy is not moving your stop loss into profit. Let it either hit stop loss or take profit. Now, if I find myself that I'm stuck in a trade all the way until the period separator over here at 5 or 6 o'clock, if I'm in profit, I'll close it and take it. I don't let trades go further than the period separator. But in this case, this one ended up going down. You could see it went above into the red box, which is the trade was negative at that point. I was in negative balance on that trade. And then it came back in profit and went back in negative, came back in profit, went in negative a little bit, but it never hit the stop loss up here. And then eventually it dropped and smacked take profit on that little wick down right there. And if it didn't, depending on your broker and the spread at the time, it may not have touched your take profit on this. If not, it would have came down and touched you and take profit on this candle over here. So that would have been another win. That was 38 pips on that trade right there. So once that one hit take profit, I moved my stop loss to the top of that candle, and it would have came and taken me out at break even on that trade. So that one would have just been a 38 pip win. And the second trade would have been I move it to break even plus just like 1 or 2 pips to cover the spread. So that would have been a break even second trade. So that trade would have only been 38 pips. The second order would have been closed out at just enough to cover the spread. So I wouldn't have had profit on that second order. Moving forward again, another very small consolidation box. High, low. Since it's a very small box, put your stop loss on the other side of the box. Wait for break, close, enter. 22 pip stop loss. 1.25 of that would be 28 pips. Roughly 28 pips. Once again, this one messed around a little bit. You went negative for a little bit up here. But overall, it came down and would have touched your stop loss over here. Same thing on this one. Once it hit stop loss, my trade would have been, I would have put my stop loss at the top of this candle over here. So this one would have been a little bit more profit. Would have been taken out right there at another 17 pips. So 17 plus 28. So a 45 pip win on this trade setup between my two trades. Moving on. Another very small consolidation box. Stop loss on the outside. Measure the box and go from high to low. Stop loss on the other side of the box. 40 pip risk times 1.25, be about 50 pips. Wait for break, close, and enter for a sell on this trade 2 times. It would have went negative right away for a little bit and then dropped and came back down in profit and hit take profit. I would have moved my stop loss to the top of this candle right here and then that candle there. And then I would have been taken out on this little wick right here. So in this situation here, roughly an additional 36 pips. So 36 plus 50, about 86 pip win on this trade setup. Moving along. Here's a losing trade. So this is a perfect example of what can happen every once in a while. This trade setup, this trading system is probably looking pretty awesome to you right now. I haven't had hardly any losers, but they do happen. And losing streaks happen as well. So you may lose 2, 3, 4 in a row and you're going to get frustrated. That's one thing I've also learned about trading Forex. You're going to have a ton of winning streaks. You're going to have losing spells. Learning to control your emotions and not let it get to you is the hardest but most important thing about trading Forex. Because if you let your emotions get the best of you, you're going to start wanting to do what's called revenge trading. You're going to try to start forcing trade setups that you think might look good, but you're just trying to make some of your money back. Don't do that. Stick to your rules. Stick to your strategy. Do not change a thing. Wait for the right setups, and when they present themselves, take the trade following your exact rules, doing the exact same thing every single time. So in this circumstance, high, low, Tokyo session. This box was larger, so I'd be measuring this one. Give me it. Trading View's messing with me today. So this box is about 50, 51 pips. So half of that would be 25 pip risk. 1 times 1.25 would be about 31, 32 pips. You can see this one ended up coming up, pushed outside of the box nice and hard, came and dropped right away back, and it would have hit my stop loss for 25 pips. So I'd have lost 50 pips on this one because I'm entering twice for my own strategy. If you enter in once, you would have only lost 25 pips. But if you entered twice, like myself, you would have lost 50 pips on both positions because both trades have the exact same stop loss. And it never went and broke and closed outside the bottom enough for me to re-enter and for a sell going the opposite way. So I just keep my box right there. And if it would have came back inside and then closed back out again and pushed back up, I would have re-entered again for another buy. But it didn't. And it didn't do the opposite. It didn't come and close outside the bottom enough for me to take a sell. It just went sideways for this day, which happens sometimes. This is a great example right here. So with my strategy, I have a rule of 3 maximum entries. If you have 2 bad trades after another, you have 1 more chance to take a trade. 3 maximum entries in a day. So this one would have been the high of the box up here, the low of the box down here. Measure that. Take it by half, risking 22 pips for 27 pips. We ended up wicking outside of the box, no entry. And it finally closed outside of the box right here. I would have bought. First 15 minutes, it would have hit stop loss, 44 pip loss. between both trades, entering twice. Came down, didn't close outside the bottom of the box, pushed back up and closed outside again. Same thing, 22 pip. This candle right here, you can see it, that long tail right here, it would have came and hit my stop loss again. This is where the frustration would have kind of set in, but you do not let it bother you. You stick to your rules, and you'll see why right here. This is a perfect setup to show you why you stick to your strategy. So we're down 88 pips right now. Finally, it breaks back out again right here. We'd enter in 22 pip risk for a 27 pip take profit. In a matter of 30 minutes, it would hit the first take profit, and then you start trailing that second order. When this candle closed, my stop loss would be in profit underneath the bottom of that candle right here. Pushing hard up again. Stop loss would be at the bottom of this once this candle closed. This candle would have wicked down, but wouldn't have touched my stop loss. Went back up, closed again right there. Open that one. My stop loss would be at the bottom of this wick right there. Moved down, moved up, end up coming down and closing, moving over and opening this candle. My stop loss would be at the bottom of this candle. Push up hard. Ends up closing right there. My stop loss would be at the bottom of that candle, so it would only move up slightly. This candle continues to push up and close. Stop loss would be there. Push up and close. Stop loss would be there. Push up and close. Stop loss would be there. You see my point here. I would have been following this up until my stop loss was taken out on this candle right here. So that first trade was 27 pip win. After we had lost 88 pips between two sets of trades right here. So first win of 27, 28 pips. Now let's measure here. We've been taken out, let's just say 205 pips. So we had lost 88 pips on those previous trades, and then waiting for the right setup again and taking it made 232 pips back. Twin trading. I hope this is making sense to you guys. Next box. High, low of the box, high of the box over here. And this is another example of why I don't do sell stops and buy stops that automatically engage, because it would have activated for a sell stop down here and then shot right back up and taken me out instead of me waiting for the close outside of the box right here. So we've got 52, 53 pip box. So half of that, you're roughly 25, 26 pips, going for 33 pip take profit. In one 15-minute candle, your first take profit is hit. At that point, stop loss would be moved to break even, and it would have came back down and taken me back out on this red candle right here. So second order would have been, once again, enough just to cover the spread, maybe plus a pip or two. I don't even count anything like that. So this trade would only been a profit of 33 pips roughly. Done trading for that day. Yes, even though this could have been caught, not a big deal to me. Follow your strict rules and stick to it. Now, with this box here, one of my rules with this strategy for GBP CAD, if a box is over 100 pips, I do not take the trade setup. The risk to reward is going to be too high for trading on a 15-minute chart. Yes, there are going to be trade setups that are going to work out, even if the box is over 100 pips. But I myself, with my risk to reward, I don't feel comfortable taking trades on boxes in the Tokyo session that have already made a large move throughout the night. Because usually when it makes a large move overnight, it consolidates a little bit during the London session and acts a little funky sometimes. Not always, but sometimes. In this situation right here, you saw that it was about a 120 pip box. I wouldn't have touched this trade setup. And you can see why, because it didn't move that far down before shooting back up. So even if I would have gotten in off or in this area, my stop loss would have been massive, about 60 pips or so at least. And then my take profit would have been 1.25 of that, which would have been much larger than it would have fallen. So my take profit would have never gotten hit, and then it would have went back negative and hit my stop loss up over here. That's the exact reason why I don't take boxes that are too large during the Tokyo session. So, and I use TradingView here, and then I also use my MetaTrader 4 section over here. I have an indicator on here that also shows my trading sessions. So this is a little bit more recent. I can't go back far without this indicator not showing up. It only goes back so far. But this is my trading platform that I actually execute my trades on. So say, for instance, if I wanted to here, draw my box. That. Low of the day. High of the day. How big was this box? About 50 pips. 25 pip stop loss. This one would have been a losing trade because I would have sold right here. And it would have came back up and taken me back out. But then it would have re-exited again. And I would have taken profit as it fell this way. So you can see this box. And these boxes change shape as these candles form and move up and down. So when London session opens is usually when it starts making its big moves. And you can see when New York session opens at 8 a.m. for us over here on Eastern Standard Time. This candle would be the first candle to form at 8 a.m. And some people like to trade a New York breakout as well. I just do London breakout sessions, and that's it. And one reason why I like this is because it works for my lifestyle. Some people will, some people won't. It requires me to get up in the middle of the night. Some people can do that, some people can't. I get up in the middle of the night and take these trades and these setups, and I like that because it allows me to get up. I set my alerts outside of my box zones, and I wait for the break. I'll enter my trades. I'll set my take profit. I'll set my stop losses. I'll set my alert at my first take profit. When I hear that alert go off for that specific sound, I'll wake up and I'll sit up and I'll start fractaling for the next however long until I get taken out. So sometimes I'm up for a little bit after 3, 4, 5 in the morning. And then I get up and I go to work. My alarm goes off for work at about 6 o'clock in the morning. So I like this trading strategy because I'm okay with getting up in the middle of the night to make my money like this. Because some people trade throughout the day and they're like, oh, I don't have time to trade throughout the day while I'm at work. I don't have time to do this. I don't have time to do that. My day is too busy, which is fine. There's different strategies for trading different times. The London break strategy here is just one of tons of different trading strategies to trade the Forex markets. But I like this because I trade the middle of the night and I'm done by New York session, and I don't have to worry about looking at the charts for the rest of the day. I'm done. I can go about my day. I can enjoy my day. And when it comes to the time where I'm trading full time, I get up in the middle of the night, take my trades, and I'm done. I can go about my day for the rest of the day and go do whatever I want to do without having to watch my phone and look at charts and have my laptop out in front of me. I can go spend time with my wife. You can go spend time with your kids. That's what I love about this trading strategy. If you can make yourself get up in the middle of the night, depending on where you are in the world. If you're in if you're in London, you're over in Europe on the other side of the earth, you're going to be trading this in your morning. Just depends on where you are in the world. But for us over here on the Eastern time zone, you will have to get up in the middle of the night. Even if you're in Central or in Mountain time zones, you're going to have to get up in the middle of the night, very early in the morning. But I just wanted to go over this. This channel, I'm going to be uploading a lot of stuff on how to use MetaTrader 4 later on. This is MetaTrader 4. I'm going to be doing stuff on how to go over all these different buttons, how to open up a demo account, how to use everything in here. But thank you guys for taking the time to watch this video, and I hope it helped you. I know I had a lot of people asking me, well, hey, what's this new trading setup that you're doing? What's this new London setup? How are you liking it? What are you doing? Well, you guys just got exactly what I've been doing. And this is what I plan on using for the rest of 2020 and there further after. So thank you guys for taking the time to watch, and you guys have a great day.